Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the August 12th, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magnificent and marvelous Monday. I know I did. And let's make sure that you and I, that we do all that we can do to have one terrific Tuesday. Now, my outcome here during the next couple hours, that's right, I'm with you for 2 hours. And here at TFNN, what we like to call the Hotel California, check-in time is 8 a.m. Our man John Logan kicks things off. We go from 8 a.m. to 6 p.m., live trading each and every day. And, of course, it's an interactive show. That means you can give us a call, 877-927-6648. Our international number, 727-445-1044. And my outcome during the next couple hours is to share with you some extraordinary tools for helping you to identify where price is headed to. On all different time frames out there, we'll utilize the lightning bolt pattern, that A to B equals CD pattern. We'll utilize Fibonacci expansions and retracements. Of course, the combination of those two are what help us to identify Gartley and butterfly patterns. We'll also look at the signs that the bulls and the bears provide for you and I each and every day. Those are the Japanese candlesticks out there. And, you know, folks, it is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. And I think most of you know that I love doing what I do. I love doing this show. I love being here with you each and every day. I love the fact that you're here with us each and every day. And my show opening, there's no question that from the moment that Tom asked me if I would like to do a radio show, that's some years ago, when I thought about how is it that I would like to open up my show, it was really in the spirit of the way that Robin Williams opened up Good Morning Vietnam, or that opening. Now, for me, it's about 10% of the way that he could do it. But I have to tell you, that is when I start my day off and I start the show, and now we'll always have a little bit more of a special meaning. Robin Williams, maybe you don't know. I know he's born in Chicago, but he grew up as a kid in Detroit, went to Detroit Country Day School. So I'm an ex-Detroiter as well, and so is his partner in that Mork and Mindy show, Pam Dauber. She was a Detroiter as well. So in any event, a very sad evening for sure. But in any event, right now, and maybe I'll comment a little bit more about that just simply during the next couple of hours. But right now, what I know you want to know is, hey, what are the markets doing? Where are they headed to? So let's go check that out. Right now, we got Dow futures trading up about 25 points. Looks like I've got a little delay in system glitch out here, so I'll do the best that I can to give you live, accurate information. S&P futures down about 3 points right now. Looks like they're trading out at 1929. NASDAQ futures off 5 points or so, trading out at 38.89. Moves in the market out here. Over in Europe right now, the DAX looks like it's off about 77 points, about 0.8% out there. FTSE down 15 points, 0.25%. A little bit of a mixed bag in Asia last night. The Nikkei up 30 points, 0.25% out there. The Hang Seng up 43, and the Shanghai down 3 points, about 0.1%. Again, our call number is 877-927-6648. Let's go check out. I'm going to switch over to my Rhodes Momentum trading strategy charts out here. My backup is just simply going to my newsletter. We can spend a full hour on that for sure. So let's take a look at where we're at in the markets, and let's go to some. Let's see what I want to go to first. Let's go to the Dow. Now let's go to the ES minute. Let's go to the S&P futures. Let's go take a look at the 120-minute time frame chart out here. So as we back this off right now, what I want to show you on this chart here is I want to show you the blue diagonal lines. Hopefully you're following us on TigerTV. If you're listening on your radio or your mobile device at TFNN.mobi, thanks so much for doing that. Let me describe to you what we're looking at. And we take a look at the S&P futures, and this is a 120-minute time frame chart, so it's a 2-hour chart. And the first thing to notice, you'll see a number of different tools and signals on my chart out here. But what I want you to first focus on is I want to focus on the descending price channel. And those are the blue diagonal lines that are on my screen out here. I'm just trying to make it a little bit larger. So the blue diagonal lines, that is at this stage here, what we can say about the S&P futures is that no matter what, even though we've had one heck of a nice bounce off of last Friday's low out there, what the S&P futures are still in is a downtrend channel line out here. So not until this channel line gets taken out, I can't tell you whether it will or it won't. I think that we will find out. We should find out sometime today. Right now we're seeing a bit of a retracement. We'll go measure those retracements. The key number for us to watch inside that retracement, by the way, I'm going to switch over to a different screen. It's going to be something for us to pay attention to. That key level we want to watch is 1923.50, and we're about 5 points lower out there. So knowing that that is the level that we want to watch, if we see the market move down there and bounce, now I've set for you the expectation of the day. Likewise, if we see price move below that, we'll probably see price move come all the way down and test the bottom of this descending price channel out here. So we know that that we've had a nice bounce. Price has not made it up to the top of that descending price channel, and that's the area to watch. Where is that? Where would a breakout occur above that level? It's probably right around the 1948-ish, 1949-ish area. I would say, let me just look at one other thing out here. That high that took place at 12 noon yesterday, 1941. So, yeah, it's probably right around the 1945, 6, 7 level. We'll know when we see, and you can draw those price channel lines on your chart as well in the home game. And all you're just doing is you're just taking a look at the body of the candle. You're not taking a look at the wick. You're not taking a look at the wick is nothing more than the extreme emotion of that trading session. Again, we're looking at a 2-hour trading session out here. And I think the bottom of this price channel is relatively cemented as well. You're looking for 3 or more co-located. It means it can be an open or a close when you're taking a look at the body of the candle out there. So at this stage, we've got a counter trend rally that has unfolded. We've got some signals, no question. We got some signals yesterday that this could be the beginning of an uptrend, and that makes today's session very important for us to follow. So that's what's going on the 120-minute time frame. Let me see here if I've got a daily chart for the ES handy. A daily chart. I'm just looking around my screens out here. I know I have something hidden. Yeah, here's the daily chart. So let's take a look at the daily chart out here. The daily chart for the ES Mini, you can also see that very well-defined descending price channel. Now, you'll see a little bit different price channel, right? And the reason that you're going to see something that's a little bit different is simply because of, that's interesting, what is that notation on my screen out there? How do I get rid of that? I can't get rid of that. Okay. Is because we're using, or I'm using, the bodies of the candle. And if we take a look at yesterday's price action, what's interesting here, in fact, let me do this. Let me move this off the screen. I'm going to go ahead and remove my Rhodes Momentum colors that are on the screen. So just give me a moment to do that. That helps us to visually be able to see the trend. I'm going to remove the colors just simply because they get in the way here. I'm just going to try to clear up the chart. So there, if we take a look at the chart, you can really see the daily descending price channel that price is traveling within. And what's interesting here about yesterday's price action, let me get my crosshairs going here. What's really interesting about yesterday's price action, the actual intra-session high was at 1941. And what you'll notice at that 1941 level, you'll notice a couple of things. Number one, it's a daily chart we're looking at. The blue line, the solid line that goes to red, that is the 50-day exponential moving average out there. And what we can see is that acted as resistance. That acted as resistance. The top of the descending price channel acted as resistance. The top of the TAS market profile signal box, the fair auction, the unfair high out there, that acted as resistance as well. So you can see there's some pretty stiff resistance inside of the S&P futures. So we've now got 2 price channels to focus on, 2 price channels to identify whether or not a breakout is going to occur. In this case here, it looks like the TAS market profile is right around that 1941 level, 1939 level is what it looks like on my system as we speak right now. Let me do this here. I can give you the exact number. It looks like it's at 1940.65. So we'll make it 1941, all right, as the high. The actual intercession high so far has been 1938.75. So there's the price channel that really you ought to put on your screen. If you see it break above this level, a break above it, price come back and test it, reject it, and then move higher, it'll just simply be another indication that this is more than a counter trend rally. But at this stage, that's really what the message of that market is right now, is that price has run into resistance that it should. If you were one that wanted to trade short from an intraday standpoint, it becomes relatively easy. Your short trade, you could enter, in essence, now, and you would know that you would close that out if you saw a price. So your stop is going to be on the other side of 1941 out there. That may be a bit too much from a price standpoint, but it just depends on the style trader that you are. And so that's what's going on inside of the S&P futures out here. We get back from our first break. Of course, during that break, I'm going to try to figure out what's going wrong with the data flow of my system. But nonetheless, I have a number of crutches, and we'll be able to get by no matter what out here. Right now, it looks like Dow futures off about 27 points, S&P down about 3. Again, the key number to be watching inside the ES Mini, it's going to be 1923.50. Expect that to be a level of support. And if it's not, it could be curtains out there, at least in the short term. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks, and the pre-market out here. Jumping to the upside. Intercept Pharmaceuticals, ICPT, is the ticker symbol. They closed at 237. They're trading out right now at 347, so that is one heck of a jump out there. Wish I could show you the chart, but I am having some issues out there. Wasn't able to resolve them all during that last break, so I'll do my best during the next break out there. Nonetheless, I do know that that is trading higher, much higher, in the pre-market out here. You've got Front Gate Financial, or Fort, how do you say this? Fort Gray Financial out here. Look, they closed at 702. They're trading out at 987. That's all that you're interested in here. Looks like Tiptree Financial is going to acquire Fort Gray, so that's what's making that stock pop. You've got Kate Spade and Company. KAT is the ticker symbol. They're out with numbers. They closed at 38.87, trading out right now at $40.80 out there. Looks like they had a net loss of a wider net loss of 4.4 million versus no, that's not too bad. Only 4.4 million versus a loss of 43 million out there. How about that for a retail store? They sell $265 million worth of product and end up with a $4 million loss out there. Interesting. Let's take a look. We've also got Exact Sciences. EXAS is the ticker symbol. They are trading the upside this morning. They closed at 17.09. They're trading out at $18.29. The downside here, you've got High Crush Partners. High Crush Partners out here closed at $65.70, down about $3 right now, trading out at $62. Looks like a secondary offering is what's impacting the movement of that stock. Buckeye Partners, BPL, is the ticker symbol. They're trading down at $76.40. They closed at $78.98 last night. Kinder Morgan, after a big, huge pop yesterday, giving back some of the gains here. They closed at $94.12, trading out right now at about $92 out there. Techmira Pharma, I believe that's the entity that may have or is being tested for a Ebola potential vaccine out there. They closed at $23.80. They are trading out right now at about $22 out there, so not a huge deal. All right, so let's see here. It looks like S&P futures off about 2. Dow futures down about 22 points out there. Okay, so looks like the data feed is working out okay. Let's go take a look at the Dow futures. We spent a lot of time on the let me take away the color on this chart as well, just like you did on the S&P. It'll make it just a little bit easier for you to view if you're following along with us on Tiger TV, and I hope that you are out there. Don't forget, you can always go to the homepage of TFNN.com, and in the upper right-hand side, you will see a button, 3 little smartphone devices on it. Click on that, and this show will stream live to your smartphone device, your pad, or what have you. Now, I've got the Dow futures up on my screen, and just as we were taking a look at the ES Mini yesterday, Dow futures really did the same thing here. The same thing being that they've got a very clear descending price channel out here. Along the tops, it's very clear. If you take a look at the open from the trading session here of July 24th. That open, by the way, was 17.031. So you got the open of that session. You've got the open of the session on July 29th. You've got the open of that real big downdraft session on July 31st. And that's really going to cement the top of our descending price channel. Yesterday, on the bounce higher, what we saw was the Dow futures get up and get into a high of the 16,581 level. What was up at 16,581? Well, it was the 13-day 50-day in this case, because we're looking at a daily chart, exponential moving average. That is acted as a resistance line. What did we see here this morning? Dow futures aren't doing too bad. You can see they're hugging the line here. They're hugging that descending price channel. Look, it is never what's the way to say this? It's never gotten my attention. Oh, how about that? Because that's truly the way to say it. It's never gotten my attention to break a descending price channel by just simply moving sideways. So if the market's going to break out, what we ought to see here inside the Dow futures is a move quite a bit higher. Some, and I would say above the market profile high. That seems to be a pretty good area, the 50-day exponential moving average. Either of those would be two really good spots to be focused on and paying attention to. The TAS market profile, 16,639. So that is the unfair high, and that is the level that you want to watch. If you see a close above that, what you'll see is you'll see the Dow futures break a descending price channel. You'll see them get above that resistance. The 50-day, by the way, it looks like it's about 16,699 out there, and that's what we'll be watching. If, in fact, the price can't move above these descending price channels, that says price ought to go down to the bottom. And where's the bottom of that? Well, inside the Dow, it's probably about 16,100, 16,095, somewhere right around there. 877-927-6648. This is Steve Rhodes and TFNN. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow, I think down about 7 points. S&P down 2. NASDAQ off 4.5 points out there. And got a little data feed issue out here, so that means we're going to have to go to backup plan B and C. But good thing that Stevie's done this long enough where I've got a backup plan B and C out here. So the first thing I want to do is we're going to take a look at the New York Stock Exchange. In essence, I'm going to go through a good part of my newsletter here during the next 15 minutes or so. It's going to be the easiest thing and the easy fallback plan out there because there's plenty to take a look at. And by some miracle out there, maybe send some white light to my data feed. But I think it's I don't know what the issue is. In any event here, let's just take a look at the New York Stock Exchange. What took place yesterday? Well, what took place yesterday, if you're watching this on Tiger TV, what I want you to pay attention to is really the bottom portion of my screen. We'll come back to the price area here in just a few moments. I'm going to go ahead and blow this up on the screen out here. And what you're going to notice is that even though the Dow was only up, 10, 15 points, something like that yesterday, gave back a good part of its gains, the actual breadth of the market, which I will consider to be the New York Stock Exchange, the actual breadth of the market was pretty good. It was good enough when we take a look at the New York Stock Exchange to move the price oscillator above the zero line. Now, when that happens, that turns the summation index up. And how important is that? Well, the summation index is a great trend-based tool out here. If you don't use it, it's one that you should add to your arsenal if, in fact, you can. If you take a look at what took place back here in the February lows, we can clearly see now the summation index happens to be it's the third panel up from the bottom of my screen out here. The bottom panel, that is the price oscillator. The center panel is the volume oscillator out there for the McClellan summation index. Now, what you can see here is clearly price was moving lower. Now, the oscillators, the summation index, it's going to turn. It's going to be a little bit of a lagging indicator out there. But nonetheless, when it does turn, it helps us to identify whether or not the markets are truly going to break out. And that's why today's session is going to be extremely important. How important? Well, if you take a look at net declining issues, that's right, because the price oscillator moved above zero, because the summation index has now ticked up. In order for the bears to take control of the market, in this case here, the New York Stock Exchange, the bears have had control of the market since July the 7th out there. That's when the summation index actually went ahead and ticked down. It was not until the close of that trading session. And they've had control since then, July 7th through August the 11th, right? Through August the 11th, because they lost control of it, in essence, last night at the close. And if you take a look at the retracements, since that time period here, if we go from the swing lows here from April the 11th up to the high that was put in, that's your 0.618 retracement level. That's all, and that's a normal. So 0.618 retracement is nothing more than a normal retracement, a normal pullback in any market. If you come off of the lows back here all the way into the February lows up to the highs, what you're going to see is that price retracement is only a 0.382 retracement. So this is a very strong uptrend that is still in place. And yesterday we saw the New York Stock Exchange move to the positive side. If we do not have net declining issues today, what that's telling us is we are seeing a change in trend. That reversal that we saw on Friday, that we saw with a little bit of follow-through yesterday, that was a change in trend that should be taking place. Likewise, if we see more than 335 or more net declining issues today, then the bulls will have, then that becomes very bearish. Because the bulls at this stage, they have fought so hard to get up to these levels, it'll tell us that the bears are just simply ready to trounce. So today's session is very important, especially if we take a look at the wider swath of the market. Now, does that mean that we can't go jostling around a little bit? We can. And so the real key here is going to be what happens if, in fact, if the bears are going to take control, then they're going to be able to push price down below the low of August the 7th. The low of last, was that the low of last Thursday when we take a look at the New York Stock Exchange out there. And so that's what we really want to be paying attention. So that's what's going on as we take a look at the wider swath of the market out there. Let me see here. I should have my currency should be coming through okay. So let me go check on the, let's go check on the currency market. Hey, I got a plan D that I can go to. So let's go check out the currencies. Let's go take a look at the euro. Yesterday, we pointed out when we were taking a look at the euro US dollar that from a bottoming standpoint that we received, got's not a great word to use, is it? That we received a reversal signal here on the trading session of August the 8th. Little bull sash, bullish engulfing style candle out there. And that was taking place as we saw price here, one of our favorite reversal patterns, as we saw price go ahead and make a lower low with less relative weakness. And that took place here. The actual low that we would look at, the lowest low from that RSI, 14-period reading, that came in on July 31st. That reading was 24.26 out there. And as price made a lower low, which was on the trading session of August 6th, looks like a hammer candle, smells like a hammer candle, but too much of a wick to the upside out there, so it really is not a reversal session. Nonetheless, on that low on August the 6th out there, that RSI reading, 29.81. So it was moving lower with less relative weakness out there. All that you do is you camp out and you wait for a reversal signal. Well, we got that inside the euro, and that was on August the 8th. But like any reversal signal, if it's really going to take off, it's going to continue to move higher, much like we saw inside of the markets. We saw a big reversal on the trading session of Friday out there. We saw a bit of a move higher. Nonetheless, it was still a move higher inside the markets. That means we have to pay attention to the potential of a bottoming pattern out there. And we've already identified for you what the message of the New York Stock Exchange, the wider swath of the market out there. Are you going to take the wider swath of the market or the 30 stocks that are out there? Well, we got to take both. That's really my opinion. We got to take both, because if we take a look at that first segment that we did, or second segment, when we took a look at the Dow futures and the S&P futures and those descending price channels, we ought to see everything kind of join in unison out here, meaning those descending price channels ought to break to the upside. And that's really what the signal is of the indexes. Now, different signal here inside of the euro. Not that it can't be making, not that it can't form a bottom here, but it received no follow-through on August 11th. It received no follow-through yesterday. It's had no follow-through today. That makes all of this suspect. So the level here to be watching inside the euro is going to be the August 6th low, and that's at 1.333. Out there. Any move below that, and what it's really setting up here, could be setting up its next price relative strength divergent low, or more likely what it's setting up here is a move to about the 132 level. 132.08 is your one-to-one A to B equals CD to the downside, and that is what's going on with the euro. Let me see, what's this look like here? No, that doesn't look very good. Bad data feed out there. In any event, so we're going to switch over. We're going to, even though it's a little bit of a stumble here, it's still not too bad of a stumble, you got to admit. Let's go take a look at the currency market here for the Great British Pound, U.S. dollar. Let's go take a look at the daily chart. Let me flip over. Let me find a daily chart out here. Let's go ahead and make a daily chart. And we'll come back, we'll take a look at the Euro-Japanese yen. I haven't mentioned that in a while, and I might get off the Christmas card list for the Euro-Japanese yen. I don't want to do that. But it hasn't been an effective tool at this stage, a really effective tool for assisting us in our trading, and that's why I've kind of backed off it for the time being. Now, if we take a look at the Great British Pound, U.S. dollar, it's trying to stage a bit of a reversal today. It is trying to form a hammer candle, and right now I have to give the benefit of the doubt that that's what we see out here is a hammer candle. If we were to close today at about 1.6788, it would definitely be a hammer candle. And then what you'd be looking for is a higher close tomorrow as some follow-through out there. What the Great British Pound, U.S. dollar has done, though, Let me get rid of that Gartley pattern, that 0.618 that never came to fruition out here. We never saw a reversal signal, and it's really the sign makers. It's the bulls and the bears that are going to give us our first indication whether or not there is any kind of reversal in any market, either to the upside or to the downside out here. If, in fact, this does not turn out to be a hammer candle, what we're likely to see is a move down to the swing point low from May 29th out here. You can see prices in the oversold condition. So the Great British Pound, that low on May 29th, is right at the 1.6692 level out there. Not a ton of bullish reversal signals. That did not take place inside the Great British Pound until June the 5th out here. So that's what we'll be watching for today. Today, really, it would be the hammer candle, which would be right around now. And right now it's trading out at about 1.6785. So anywhere between there, 1.6790 or so would be the formation of a hammer candle. So that's what's going on the daily chart for the Great British Pound. Let's go take a look at the Euro-Japanese yen out here. And here is the weekly chart. Now the weekly chart still has an uptrend line that we're taking a look at. And it was quite a move off of the lows back here for the Euro-Japanese yen back in July of 2012. And the reason that we take a look at this currency pair is because it has been the carry trade. It has been the signal for markets moving higher in tandem. It's this currency pair that has tracked the U.S. stock markets better than anything else out there. What we look for is we try to find divergence in this pattern here. So let me switch over to a different chart out here. Let me go take a look at a different chart, my set of divergence tools that we look at. We take a look at our set of divergence tools here, not to jump around. I won't jump around, so we'll come back to that GE chart. But let's go take a look at the NASDAQ. Let's take a look at the NASDAQ and its correlation to the Euro-Japanese yen. And the reason, at the bottom of my chart, by the way, if you're looking at watching us on TigerTV, it happens to be the Euro-Japanese yen. And the upper portion happens to be the NASDAQ. Now, typically, I'll use the S&P futures out there because of its correlation. But what we saw here in the marketplace was we saw the NASDAQ really move lower between the time period of about March the 5th down to the lows that were put in April out here. The significant lows in April of 2014. And really we saw the Euro-Japanese yen more work in tandem with the NASDAQ than it did the ES Mini as far as forecasting that decline. Since that time period, though, what you'll see, just like in the S&P futures out here, since the April 11th low, what we have seen is we've seen the NASDAQ, in essence, move higher, and the Euro-Japanese yen move lower. Now, it finally gave the signal. They finally joined forces out here July 30th, July 31st. Finally, all that time period finally mattered. So at this stage, the way that I'm going to view this chart out here is that the divergence that was forecast in the market, it finally has worked, and now things, in essence, are back in sync. And what does that mean? That means that we want to be paying attention to other divergences in the market. Well, guess what? We actually have one that is really in place as we speak right now. So that makes today's trading session very important to watch if this correlation is still working for us. Because if we take a look at the top part of the chart and we come off of the lows here, I'm just going to go ahead and draw a couple of lines in here for us to take a look at. And what I'm referring to is the Friday session. We can clearly see that the NASDAQ is moving higher. Likewise, if I come down here and I take a look at the Euro-Japanese yen, it's moving still just slightly higher at this stage. Let me go ahead and change that to a black color. That makes it a little bit easier for you to watch on Tiger TV. So in essence, the divergence would really take place out here if we see a close below that August 7th low inside the Euro-Japanese yen. What is that price point to be watching for? Let me come out here and take a look at that. Let me give that to you on the daily charts out here. That price point for us to watch is right out here, August the 8th, and that low is 1.35716 out there, and that is a level for us to be watching closely. So that's the first, so we don't have the divergence there, but it is one for us to pay attention to. What's interesting here is let's go back and take a look at the GE Dow chart out here, because it's been the Dow that's been the weakest. It's up about 2 points right now. S&P is up 1. NASDAQ is, I think, just about unchanged out there. I've got a number of different different tools working. One of them, though, unfortunately, is not my data feed out here. But nonetheless, let's take a look. We got plenty of charts to look at to give us some messages of the markets. Let's take a look at GE. And GE is a wonderful chart because of its correlation to what's going on inside the Dow. And at this stage here, as we take a look back at GE, you'll want to go ahead, if your charting system, your charting tools allow you to do this, you'll want to go ahead and put GE on one portion of the screen. In my case, it's the upper portion of the screen, and you'll want to put the Dow on the other portion. In this case, it's the lower portion. Now, you'll see the blue diagonal lines on my screen out here coming back into the lows back in October of 2013. You can see that GE broke through those lows back in January 16, 2014. They were the first signal that the Dow was going to experience problems. You can't use this as a timing tool, but what you can do is use it as a leading indicator of an impending current that is about to take place. Well, in this case here, it took 20 calendar days, in order for the Dow to go ahead and break through its trend line. Same trend line back here. And when it broke through it, that's where we saw the large correction that took us into the lows in February. Well, we have that same pattern that took place out here recently back, the Dow finally broke through, went on July 30th, whereas GE had broken through it on July the 25th. In the case of GE, it came back up and it tried to get back inside that rising trend and failed to do so. When we get back from this break, we'll come back to the GE chart, because GE was also one of the tools out here that gave us a signal. It gave us a signal of the bounce that took place on Friday. And at this stage here, we continue to see GE moving higher, even though the Dow isn't. Something to think about. 877-927-6663. This is Steve Rhodes. This is TFNN. Right?
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors, such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Basically, a flat market out here right now, so that's a good thing. Makes it a bit. Dow just went slightly negative. S&P is up a point. NASDAQ up 80 cents. And before we went to that breakout there, we were taking a look at the correlation chart between the GE and the Dow. And what we saw here inside of GE was we started to see GE start to make some move higher out here in the marketplace while the Dow was moving lower. Actually, that correlation here... see, the correlation with regard to GE was making its low back here on August the 5th out here. And what we saw take place inside of the Dow, now this is the index, this is not the futures that we're looking at. We actually saw it go ahead and make a lower low in through Friday, but that was not the case with GE. GE at that stage started to make a higher low out here. And that's the first indication of at least, now GE is not going to move the Dow. It just doesn't have the weighting structure in there. It's not like a ExxonMobil. It's not like a MasterCard. It's not like a IBM out there, you know, the big, heavy cap-weighted stocks. But that's actually the cool thing about utilizing this correlation chart out here, about utilizing GE, is because maybe they have their tentacles in so many different things out there that it's really a good indication of what is maybe going to transpire. So today's trading session is very important. You know, as I summarize where we're at, it's really fairly easy for me. It's really what takes place here at the end of the day. And at the end of the day, what we want to see, because of the signals that we received in the wider swath of the market, that's the New York Stock Exchange, what we received out there was a signal that actually turned the summation index up. That's the sign of a bullish trend that is beginning. That bullish trend needs to take place for more than one day out there. And in order for that to happen, so long as there are net declining issues in excess of 335, and preferably you'd like to see net advancing issues, you'd like to see the New York Stock Exchange continue to move higher, as you would the general out there. GE, in fact, well, I don't know, I'm not with the data feed. I'm not going to go look at the GE stock chart out here. That's really what the setup is. And it doesn't get any easier than that. I would also say that the descending trends that we took a look at inside of the Dow, inside of the ES Mini on the daily charts, and again, I'll go ahead and put those back up on the screen out here. And I would say we really want to focus in on the Dow, because the Dow has arguably been the weakest out here. And just simply, if you want to draw these utilize these tools, draw them on your charts out here, just simply use the body of the candle from July 24th out there. That top, that high out there was at the open was at 17,031. Use that candle. Go ahead and use the candle from July 29th. That candle open 16,914. Go ahead and place a line and connect the dots. The third dot out here is going to be the high from July 31st. not the high. It's going to be the open of the candle. That's going to be at 16,822. If you just simply connect those dots, if you were to see the Dow futures go ahead and close above that level, and maybe during the next hour I'll be able to actually go ahead and pull up the Dow chart. That's what I was trying to do and couldn't get that done. And we can take a look at that level out there in case you don't have access to the futures. But in essence, what we're really looking at is a close today about 16,570, or maybe, I don't know, around the 16,520-ish mark or so, I would imagine right now. Close above 16,570, certainly close above 16,639, starts to really take things into bullish moves inside of the Dow, which is one of the weaker link setters out there. So, folks, thanks so much for joining us here, and have a great Tuesday. I'll be back with you ASAP. Take care now.